you get these very alluring rallies, these snapback moves of 30, 40, 50%. And people, oh, it's a new bull market. And then they get hammered once again. It's pretty sad, really.
Right.
So that was David Hay. He is a partner at Evergreen Gavico and is author of the book Bubble 3.0. He's also been in the securities industry since 1979. In today's video, we're going to be looking at an interview he recently did. He talks about how we are still currently in a bubble and how a recession is on the way in the United States very soon. So that's what we'll be checking out today. He talks about a lot of interesting things. And you guys know what the Bitcoin bros think about this cryptocurrency market. We think that the bottom was 15.5 for Bitcoin and we're steadily going up from there. We do believe inflation will start to slow down this year. We'll start to see it go lower and lower. That is our personal opinion. The last CPI and the last PCI inflation reports didn't really look that good. But going forward, I think we'll start to see lower inflation numbers. Just my personal opinion. You guys can be the judge of whatever you think is going to happen over the next couple of months. Let's go ahead and jump into today's clip.
Well, it's a very timely and important question, and I don't think there's any question that the most recent one was the biggest bubble ever, the everything bubble. And it's important to understand the way these work together, because bubble 1.0 was the tech bubble that happened in the late 1990s. And I think most of us that were in the business at that time thought we'd never have one worse than that. But then a few years later, and of course the Fed, well, I shouldn't say of course, but it's true, the Fed was under a lot of pressure to create a new bubble. People like Paul Krugman were insisting that the Fed needed to do something to bail out the economy after the tech bubble imploded. So he wanted to see another one, and he specifically suggested housing. And the Fed, either wittingly or unwittingly complied. So we had that bubble, which again looked like it would never be exceeded. But of course, once that bubble popped, then the Fed went into triage mode with things like QE, QE1, QE2, QE3, all these things that sound like an ocean liner. And then, and of course, COVID hit. We got the escalation, if you will, of QE with modern monetary theory, MMT. And then that triggered what I would say the biggest bubble of all time, when you had, whether it was SPACs or NFTs, non-fungible tokens, the meme stocks, the cryptos like Dogecoin. Dogecoin got up to an $88 billion market capitalization, even though the founder very honestly and accurately said it's worthless. So we've only seen, obviously crypto land has been crushed, though it's trying to rally. A lot of I used to call them the crazy overpriced stocks, the COPs. A lot of those have been absolutely nuked. But they're making a valiant comeback, but that's typical of bear markets. The bear market rallies are very strong, very intoxicating, but also very dangerous.
So Harry thinks we are in a bear market rally, and in terms of Bitcoin, from the low, we're approximately up around 60% from the low of around 15.5 for Bitcoin. So is this another bear market rally? Are we just going to see Bitcoin start to come down here over the next couple of months? To me, it seems like we could potentially see something play out like what happened in 2019. We had a huge drop off, consolidation, and then a move to the upside. We had the same thing here, huge drop off, consolidation, and then a potential move to the upside. And that upside move back in 2019 was a massive move up 260%. So let me know what you guys think is going to happen next. Do you agree with Harry? Or do you think Bitcoin is going to rebound here over the next couple of months? Let's go ahead and see what Harry has to say about the potential bottom already being in.
Well, I think it gets back to similar to what I was saying about trading ranges. The longer the trading range, the more important the breakout. And I think the bigger the bubble, the bigger the bust. And if you accept the thesis, which I think is frankly inarguable, that what we saw in 2020, 21, early 22 was the biggest bubble in human history, that the payback was going to be intense. And frankly, I think we've only seen part of that payback. And there's just people do have this recency bias, and so much money was made in a lot of these highly speculative areas that I think most investors desperately want to see those things take off again. You may have, Kathy Wood is a fine individual. She's made money for people, at least her early investors. But the fact that with her down 80%, from her peak on the ARK Innovation Fund, and yet still getting inflows. I've never seen that. That just tells you how strong that belief is that these disruptive, innovative, usually profit-free companies are going to be dominant once again. And I just don't think history is at all supportive of that. But you get these very alluring rallies, these snapback moves of 30, 40, 50%. And people, oh, it's a new bull market. And then they get hammered once again. It's pretty sad, really.
Right.
Well, sure. I think if you zoom out and look big picture enough, kind of a cinemascope, or I guess these days IMAX view of things, sure. Doesn't matter, even the 1930s were just a pullback within a long-term uptrend. So I think that's true. But, as somebody, I think it was John Maynard Keynes said, in the long run, we're all dead. And certainly our clients' tolerance for losing money year after year after year isn't very great. And there is a pain point where people finally say, I'm just out. We certainly saw that with energy here recently. We even seen it with gold miners. So when things don't do well for an extended period of time and they become extraordinary values, people tend to give up on them.
If I didn't get this wrong, I believe you said that the bubble of last year has already popped. And of course, we've seen asset price decreases. Are you suggesting then, David, that we've seen a bottom?
No, I don't think we've seen a bottom. I seriously doubt that. And it gets back to this thing of looking, from a technical standpoint, first of all, it looks like we're, still in a downtrend that started from the peak of late 21, early 22. And not everything turned down at the same time. The crazy overpriced stocks actually started getting crushed kind of mid 2021. And a lot of those, as you know, are down 70, 80, 90%. So we're talking the kind of damage that the NASDAQ suffered when the tech bubble popped. But when these recession forces are mounting as they are today, and Mike Wilson said recently that when the weakness in the leading indicators is overwhelming, and I think he's the best strategist on Wall Street. And I don't know whether you've had him on, but he's a great interview and very lucid and very logical. In fact, he did a great job of calling a rally back in mid-October. But he's now shifted back because he realizes that if you go into a full-blown recession, the market goes down more than, what is it down at this point now? 13%, I think, is all the S&P 500 is now down. It was down 18% last year, as you said. It's down, up 5% this year. It's only down 13%. That's just a correction. And yet we had this massive bubble. We had a huge move up in interest rates. And now we're looking at a major earnings decline. So I don't think you can say that. I mean, the leading indicators are just screaming recession right now. The GDP came out pretty good today, but a lot of that was inventories and net exports, and those aren't the best drivers of a lasting recovery. And the fact of the matter is, if you look historically, the market doesn't actually make a durable bottom until the Fed is about 2/3 of the way through a cutting cycle, and yet they're still raising. And then, how about QT? Hardly anybody talks about QT, quantitative tightening, the opposite of QE. We know how beneficial QE was for asset prices, but are people really focused on the negative gravitational pull from QT? I don't think nearly enough.
So thank you guys for watching all the way to the end of today's video. Make sure to hit that like button if you found any value. Subscribe if you are new to the channel. Let me know what you guys thought about today's clip in the comments section below. And guys, check us out on Patreon. We have exclusive content coming out there very soon. We are very new to Patreon, but we are trying to build a community over there, give you guys some exclusive financial and crypto content. So check us out. And thank you guys again. My name is Aaron from Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great rest of your day.